Equities, fixed income, currencies, commodities, of course, derivatives. Welcome. This is Markets Today morning version. I'm your co-host, George Bode, co-hosting this session with Mbide Mwema. We have a lot of discussion ahead. We're looking at, we're tracking the events around KCB, National Bank of Kenya acquisition, and some news that has just come in today. KCB has said they've received the CMA approval to circulate the offer document to shareholders of National Bank of Kenya. Of course, off the back of yesterday's breaking news on Metropole TV, that the board of National Bank of Kenya actually suggested that the takeover offer from KCB of 1 share for every 10 NBK shares was a massive undervaluation. We'll also be tracking that. We're also talking about insurance sector as a whole. We have with us Patrick Mumu, who's a research analyst at Genghis Capital, talking to us about the health and the state of the insurance sector in Kenya. We'll be talking about distribution, we'll be talking about the health for the long-term business, we'll be talking about the health for the general insurance business. You can look forward to more discussion. But before we get there, we're also brushing over some of the top news we're looking at today. We are also waking up news that CIC will be selling land to redeem a bond.
It has a...
Is that a scary news?
It's very, because it has a bond, 5 billion, that's due for redemption in October. And the local dailies have put it out and said that the CEO wants to sell or is looking for people to buy land that they have in Kajiado and in Kiambu, and hopefully from this sales they'll be able to raise 10 billion. It's a bit worrying if you have a bond that you're redeeming in October for 5 billion and you're forced to actually sell assets to redeem it. And I suppose it's been more than 3 to 5 years. It typically is 5 years. The bond tends to be for 5 years.
Yeah.
So it's very worrying, and the question is, which is what we need to delve in later on, are these companies generating sufficient revenue and surplus to be able to afford this debt that they're taking, and what are they using the debt for?
But it tells you about the cash position, the liquidity position of the insurance company. I mean, insurance company, financial services companies, it's a very liquid business, right? I mean, you sit on float, you take X amount of premiums.
Exactly.
And talk about the short-term business, you take X amount of premiums, X amount of claims crystallize, then you always have a float flowing around.
All the time.
It's a liquid business. I would be very concerned. Well, I would definitely want to get to the bottom of that story.
And just understand,
why
are you selling assets to redeem bonds?
If it's true that CIC is actually selling a piece of land, two parcels of land to redeem a bond, that's very scary.
What happens if they don't sell it in good time? Maybe it's something worth looking at their financials just to see.
That's about $100 million in land sales. Can you get that in this market? Maybe you can. We're also following the NBK story.
Yes.
Yeah? Right. KCB has received CMA approval to circulate the shareholder documents to the offer document to NBK shareholders. You have any feeling about that?
It's interesting. I mean, yesterday
what
NBK...
are the timelines, by the way?
You know, there are two timelines. I was actually looking at the documents from NBK, the board, and as well as the documents that have come out today from KCB. So the documents from KCB today say that the offer closes 30th of August. Yesterday, the documents that came out from NBK said that they were waiting till the 24th of July to see if KCB varies its offer. That's in terms of the timelines that they've been given approvals by the CMA. I think the more important question here is, will KCB go ahead and review its offer from 3.8? And NBK is saying, we think we're at 6.1. Yeah. There are no competing bids. Will KCB be pushed to the corner and told to either improve its bid, or will their shareholders reject? Yeah,
one of the discussions we had yesterday was that NBK board issuing this advisory note to the shareholders. You got a sense that there was some external hand in that.
You never know with these things.
But remember also that this parliament has dispatched Auditor General to do a special audit on NBK.
To do a special audit. What I always say is, any time a board makes a decision, it could be unanimous, but there's always an underlying tone, an underlying voice that the board is representing. Yeah. And we went back and forth on this yesterday, and it seems that maybe NSSF wants a better price. NSSF is now 48%. The government is 22%. If this offer goes ahead, then the tables turn, because now the government becomes a majority holder. Yeah. So we are saying, we are playing devil's advocate and questioning, could it be that the NSSF wants a better price, and this is the last influential decision they may be able to get away with before the tables start in terms of shareholder ownership and influence? Influence as far as the operations of the company are concerned.
But the board also appeared, I mean, their statement, they really appeared to have our hands tied down, you know.
Exactly.
There is no competing offer, at the same time, They need the capital.
They do.
Yes,
it's
they need
actually
the
a
capital from
distressed
KCB,
asset.
yes.
It's a distressed asset.
But so they seem like, okay, fine, it's an undervaluation of our company, but again, we have no choice.
It feels like, KCB, we know you can do better.
Yeah.
This is what we think we are at. I mean, there's nobody else, but if you can, you're our big brother, please just see if you can do better. That's the conversation. That's the tone that I'm getting from this.
Do you see KCB varying the offer?
KCB Capital, if you know the head there, he's a tough negotiator.
Yeah.
I don't know, but let us wait and see. Let us not speak in advance on their behalf.
You can look. We can certainly look for more of such discussions in the coming shows. But for now, we look at them. Let's have a recap of what happened in the stock market yesterday. The derivative markets, we also saw a single stock futures trading KCB 468,000, 12 contracts traded. It appears to be gaining slight momentum, the derivatives market. Tomorrow is a full launch. It's a hard launch. Yes.
And there are a couple of events.
There's a cocktail on Friday.
On Friday, I'm looking forward to that. Let's see what the chit-chat is all about.
Yeah.
Right.
What did you observe in the market yesterday? It was like a heavily traded market.
Yes.
626 million.
626 million
turnover.
Safaricom.
Monday was typically Mondays a slow day.
Mondays are always a slow day.
Anything you observe in the market?
No, nothing irregular.
It's a very dull market.
Very dull. Nothing exciting happening. We're not seeing any triggers of interest. I haven't seen any exciting news, but I think once the second quarter numbers start to come out from the banking sector, maybe towards the end of this month and August, then we could see a spike. Remember, we had this conversation about whether there's an opportunity to buy into the banks. Now that book closure has actually happened. Yeah. So maybe we could see that once the numbers start to come through. Yeah. But before we close this session, I forgot to mention that fixed income, the market, it's trading at its highest level in 6 years. I think close to about 69 billion, 69 or 68 billion it has traded. Yeah. Highest level in 6 years.
Oh, that's a lot.
We discussed this. We've been discussing the fixed
fixed
income strategy
income market,
every Friday.
Actually, the market is quite
it's a
very
liquid.
With liquidity. Yes, it's very liquid. In fact, I was talking to one of the banks, one of the treasurers in the bank was telling the 15-year auction that's coming up this month, it's likely to breach 12%.
Wow. 12%?
Can you imagine buying a 15-year bond for below 12%?
Imagine that.
A 15-year bond for below 12%?
There's just too much.
Aren't we looking at retirement poverty?
No, we're just looking at where to place the money, because if it stays with you, it earns you nothing.
Yeah. But just talk about banks. Yesterday, Kenya Bankers Association released, I don't know, they're calling it, it's a bank KB annual report or something like that.
They have an annual report that they release every year, just looking at the last financial year, rather the last calendar year, and what's happening in the sector. Nothing new there. They're saying NPLs are slightly over 12%. It's a problem, but I think what they're saying is just they're compiling and they have a lot of statistics, but really I didn't find anything new to be said. Yeah. But we did cover it here at Metropole. There was a live stream, so for anybody who wants to know what's going on. But the key thing was, the rate cap, whether a review happens, there needs to be an access to credit or a deployment of credit, especially to the SME sector.
The economy is illiquid.
Economic growth is supposed to be happening.
One of the things that caught my eyes in the report is the fact that annual asset growth rates for banks, the banking sector, has actually been coming down since 2008. Wow. That's something to look out for, and something we need to discuss on our shows. Yes, look out for. For now, we take a short break. We look at the commodity prices. When we come back, we're talking insurance sector with Patrick Mumo. See you shortly.